Ladies and gentlemen, K Kim here. Welcome to the daily update. I hope you guys had a good day trading today. Market is up about 1.22% on the S&P 500, but actually there was some big fluctuation today. So let's kind of dive in, investigate together here. So you can see this is where we closed yesterday. We talked about that, and then we actually slightly gapped down, and then at one point market was down as low as 3%. So from the lows on the first hour of trading this day, market is actually gone up 4.33%. It reversed back up. We made 4% run in just one single day. That's some huge fluctuations that we're witnessing here. I mean, can you imagine being down 3% in what first hour and then being up 4.33% towards the end of the day? And there are a couple things we talked about on the last night's video, right? We talked about bears, actually bulls, making sure defending 277. No matter what, bulls must defend 277. And there's a reason why. And you guys remember, I don't know if you guys remembered my market update video. I don't know, it was last weekend, a couple weekends ago. I talked about if this one thing happens, it's all over. You guys remember that? And I talked about how there has to be a big gap down. And I've been talking about bears must gap it down. Bears must gap it down. Bears must gap it down. You guys remember me saying that? And a couple people actually asked me on that video that why does it have to be a gap down? And there's so much to explain, so I didn't explain on the YouTube comment. But I'll explain it with today's action. This is why. This is why. Because the gaps are going to provide support. And the support area, the prior resistance and the rising pivot and the moving averages and the gap fill, all of that is going to act as support. So what happens is if you don't gap it down, if you just bring it down, buyers can use that support level to bring it right back up. This is a 4.33% run in a single day. In a single day, 4.33% run in a single day since the lows. So let's talk about it real quick. Let's kind of go back. Let's move. Let's look at things in a medium term here, midterm. First of all, bears did come down hard, and they really tried it hard, right? Because they didn't waste any time. They really didn't let bulls hang around. They brought it down for 2 days in a row, and they continued on lower early hour trading of this hour, the first hour of today, despite the fact that we are at oversold level on yesterday. Remember we talked about we're at oversold? So that was that last push. This is a reason why I said on last night's video, bears want to gap it down. Gap it down, because when you don't gap it down, when you just come and fill the gap, it's going to provide strong support. Here's why we saw 4.33% move since the lows of today. I'm going to explain to you why. Because first, the gap was filled. Second, we have that horizontal pivot. And then we got the rising support. Not to mention, we have the moving average, right? We're 175, simple moving average. We're all in that vicinity. I put a box here letting you know that might have been a trap. So what happened was we dipped lower. There's a lot of stops were taken out. So basically today's action was trapping both bulls and bears. It's trapping bulls because bulls, they put their stop underneath some of these support levels. They got stopped out. Bears saw that it is breaking below some of the key levels, right? They talked about, they probably looked at this as a double top. I know a lot of people are talking about this as a potential inverted head and shoulder or a head and shoulder formation, and potentially this is a neckline or something like that. So neckline is broken. I remember last night, I think a lot of people were talking about the head and shoulder formation, confirming that this thing was going to go down 250. And so when we started breaking lower fast this morning, what happened was bears got really excited, maybe started shorting even more. Bulls got scared, they got stopped out of their longs, and that's what that lower wick signifies. And isn't it interesting? We got in that first hour. It's not coincidence that very first hour we dipped lower, filled the gap exactly to the T, and got right back up, right back above these rising pivots. And then ever since then, every hour, bulls brought it up. This is the reason why I said it has to be a big gap down if the bears really, really want to truly see this thing breaking lower. If bull bears bring it down, we have too many support levels, not to mention we got that longer term moving average still rising. We're now staying above it, right? So as of today, as of now, because we've seen a lot of bullish, activities today, throughout the day. However, I still want to categorize the short-term sentiment to bearish because we're still below in this short-term moving average. Midterm, I still want to categorize it as neutral because we're still looking at things in the midterm. We are still trendless. We do not have a lower low. We still don't have a lower low. That does not count as a lower low because if I actually go to line chart, look. Go to line chart, you can see that we're still, that's not a lower low. We got the low, we got the higher low here. So we're kind of, you can say, well, this is a lower low. Yeah, kind of, but this is still in the vicinity of higher than this low. So overall, we're still trendless in the midterm. In the longer term, however, and that's what we've been kind of focusing on. So when you see the market start shaking and baking like this, you always want to look at longer term perspective and see, okay, what's the longer term saying about it? We've been saying this for months now that the benefit of the Dow goes to buyers in the longer term. And that's why shenanigan like this happens. I mean, that's definitely a shenanigan. I mean, 4.33% up move since the lows of the day. I mean, that's some huge fluctuation. Keep in mind, it was down 3% first hour of this trading, and then it was up 4.3% since the lows, closing the day with the 1.2%. So there's a lot of shenanigan happen today. So what can we expect going forward? Well, bears want to make sure there's no follow through. No follow through. Bears want to make sure want to come back down to 277, 278 as quickly as possible. Make sure bulls does not reclaim that moving average, because looking at things in the midterm, mid to short term of things, when buyers reclaim that moving average, you see it here, they brought it up. You see it here, they brought it up. You see it here, we slightly got lower, we reclaimed it, came down, retested support, we brought it up. Bulls are eyeing on that moving average once again. If the bulls reclaim this moving average, if this moving average starts rising higher again, at that point, I have to categorize this market bullish in the short term. Right now, it is declining. That's why I'm still categorizing it bearish in the short term. So bears want to make sure bulls do not reclaim this to the upside. The price do not stay above it. What bulls want to do is you want to get up, maybe a comeback and retest that moving average and then make higher low, right? We saw that here. We got below it. We move higher, pull back, that act as support, and then made a move. So that's what bulls want to see. What bears want to see is bears want to make sure that level is acting as resistance and then maybe cultivate lower high and then fall lower, potentially maybe lower low. That's exactly what the bears want to see. So in the micro term, like just looking at today, like just looking at today's price action, there's a lot of bullish momentum. Bears need to kill this momentum as quickly as possible. Let's look at the oscillator here. So we talked about this oscillator yesterday, and that oscillator was oversold yesterday. So I really think bears needed to gap it down. I think that would have been more fruitful. Since they couldn't gap it down, they just came down and filled it. Buyers just, swarmed in and bought that dip hard. And you can see every single time when this oscillator turned back over, we went all the way back to that top of its band. Here, 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 here. So we want to, looking at this oscillator, you want to give benefit of the doubt to the buyers that they can do something like this again. So the momentum is there. The buyer's momentum is there. So we have to be fair, because a couple days ago I said the bearish momentum is here. Remember a couple days ago I talked about that when oscillators are down falling like this. We talked about how there's bearish momentum. They're going to continue trying to bring it down and come back down to the bottom of its band. Now we have to be fair for the buyers. That buyers now getting back up after oversold sentiment. We have to be fair that they could very well bring it back up to the overbought sentiment. All right? So let's see if the buyers can continue tomorrow. And let's see if bears can utilize this short-term moving average as potentially a resistance and maybe cultivate a lower high. Right? We'll go from there and we'll follow up tomorrow. You guys have a wonderful evening and good luck trading tomorrow.